Good Fed Day, Warriors. Everyone have their game face on? How you doing, Bran? Everyone doing all right? Ready?
Ready as we'll ever be.
You're the king of understatement, Ryan. So I'll tell you something. So the turnaround Tuesday trade, fading the yen yesterday worked. I'm out now. Maybe that's just an ABC. We're going to blow again. Anyway,
Nice
I
one,
just
mate.
wanted, huh?
Nice one, mate.
Oh,
Nice
thanks.
sniping.
And yeah, and then I was long cable. I'm out of that now too. So I'm flat currencies going into this. I don't know what to do. All I could do is imagine what happens if the market rallies. What would I do if the market breaks? What would I do? And the other big feature is Microsoft. They actually had beats, but it's going to come in 12 lower. I think that's the majority of the pressure on the market. NASDAQ acting worse than S&Ps. This was not much of a rally in NASDAQ. It's the first time, I don't know, maybe you guys can remember, when's the last time you saw a new recovery high in the S&Ps and the NASDAQ 100 being miles away from it? Is that just rotation? I don't know. I think it was a serious non-confirmation when the leader becomes a laggard. What do you think about that, Ryan?
I think, obviously the NASDAQ, I think, outpaced the S&P initially in that early run. So I think that's probably a reason why, the S&P's been on more of a grind, whereas that's been, there's been a more of a sprint. So not surprised to see it, lagging behind now.
Okay.
But yeah, things don't go one way forever.
And, the S&Ps too, I guess you could stay bullish on the S&Ps until we're like under, I don't know, 4380 or so. This would be the marginal line for me if I was bullish S&Ps all the way down there. But I think you're going to get signals before that. Anyway, we'll see. I think it's the first time I can remember when S&Ps were coming in lower into the Fed because they were never worried about it before. I don't know. Maybe it sets it up for the Fed does something and the S&Ps explode to the upside. Possible, but
I think we might be setting up for a bit of a pullback. It's even this leg from July has been fairly strong. Without much of a pullback. So trends. If you've got a strong trend, it always likes to refresh now and again.
Yeah. Okay. What's the strongest trend you see in currencies? I'm having a hard time seeing a trend.
Strongest trend. You've got to say the pound at the moment still cable is still pretty much holding its trend. If you take it back to that September move, where we get those big lows, it's been pretty much, and it's doing
dollar max
refreshments in there.
Dollar max keeps going down, Blake says. So that's another one.
Hey Ryan.
Euromex. Yeah.
Ryan, do you have a new microphone, right?
Yeah.
I think it's a little far away from you. I can't hear you as well today.
Okay. Let's work. How's that?
Yeah, much better, actually.
Yeah.
That's much too loud. Can you put it a little bit further?
There you go. How's that? Testing.
Yep, I can definitely hear that.
Good.
Okay, man. Good morning.
Morning, Dale.
How are you, buddy? So commodity currencies still expressing more weakness than the rest of the dollar pairs.
Yeah, we've had the revival of the commodity currencies over the end of past week, start of this week, and then Aussie got a slap around the ears after the on the weaker CPI, and seeing exactly the reverse of what we saw in stuff like Euro, Aussie, Aussie yen, and things like that. So yeah, it's a big wishy-washy machine still going on. We are on a bit of a level for me. You on the Aussie, you're around mid-level, but I've also always viewed.
You mean these moving averages, daily moving
quarter
averages?
to
Yeah,
740 as a bit of a level. So
yeah.
it's probably decision time on the FOMC then. And the Kiwi is about the same, around 62 the figure. This seems to be an obliged tube station there, or metro station there, around 62 the figure, and we're on that level again. Look at the euro; it's around 110.30, around that level. So we are on levels where you say we are mid-range. There could be a big non-event, or we take the decision for the next moves to come. And also on the combination of euro and or ECB FOMC, I think the euro dollar is will make up its mind to get back up to 112 or crash to 108, in my opinion.
Okay, euro pound. I keep giving it. You know, when I saw a move like this, I'm pretty surprised it's giving this much back.
Yeah, it's still heavy.
What was it? It's just another rally to sell,
Yeah.
and you know, gets bulls excited, and now it looks like it's going to wash to new lows.
Well, imagine a slightly, or let's say a hint of Lagarde tomorrow that they step away from their ultra hawkish rhetoric, and this euro sterling could test 85 again. No?
Yeah, well, there's already two drives here, so it looks incomplete. We're like, you know, so that makes the euro your preferred short, because you know that kind of changes my plan, because I was thinking about, you know, if the dollar weakened after the Fed, I was thinking about a sale and cable up here.
Might be time maybe against you, if I may say that way, because we never know what's going to happen next week on the Bank of England. But
Oh yeah,
I would say if we get a little bit of a dovish FOMC, cable could be one that benefits the most from it. That's what I said on the flow show too. And then we may get that overshoot on the Bank of England next week, and then time to get the hammer out.
You know, I remember when you know, Blake had all these big fibs up here in the euro, and you know, and down here I was talking 112, and then when it got up there, the momentum was so strong, I thought we would just have a correction. And both Blake and I talked about, I don't know, 111.5 was going to be like, you know, reasonable pullback before another run, and you know, it's become resistance now. I think it went too deep for this just to be a pullback. Maybe the euros are short up here around 11.5, 112.
Well, the data are telling us that things in Europe are not very rosy. And I actually showed that level in the 112s again this morning on the flow show, because it's a 61.8 of the whole pandemic decline, right?
Yeah.
And
well,
tagged in.
I'm sorry, go ahead, because my rationale was the weekly moving average up there.
Yeah, and also if you put the trend line from the 95.25 lows over the low earlier in 2023, it comes in around there as well. It's going to be a big level if we ever retest it.
You know, maybe it's going to be one of these times where we don't have much of a dollar pullback, because, you know, everyone, I think about how I'm thinking, you know, on the dollar index pulling back here, but I want to buy a pullback, you know, and everyone, you know, thought including me, thought we'd rally to par 50 and come off, and you know, we still could, but maybe it's going to be shallow, and you just have a lot of bears trapped in the dollar here. Something to think about. I think that I can't really say for sure. I don't know what DSI is or COT, but I have to, people were bearish a dollar here, saying a weak rally, and then really got bearish a dollar on a breakdown. And the fact
The
that we
issue-
negated it, huh?
The issue with positioning, Dale, and we spoke exactly about that. Was it yesterday or on Monday on the Flow Show? If people care to listen to that again, is positioning.
Yeah.
Positioning can be on-site or off-site for weeks, and even if you see the positioning details that come out, that are published, they are nowhere near what the total position is in the market. Nowhere near. Because, for instance, you don't have the big option volumes in there, like cash, really cash. There's a lot of positioning in futures, but when you look at cash positions, they're not all reported in there either. So, yeah, I mean, it seems that people are still short dollars, but I'm always taking that with the necessary pinch of salt. Those position reports.
Yeah. Well, okay. Let's look at what's happening in China. So, it's been kind of correlated with the yen, right? Recently, this pullback, I think, looks shallower.
Yeah.
Okay.
In dollar China, and again, we spoke about that this morning. You have to look for the sentiment in dollar CNH. There is one important factor that I mentioned this morning, is that if the market trades below or above the dollar CNY fixing, and if it holds below or above. And we have seen over the past couple of days when the Chinese submarines were selling dollar China, they've put the dollar CNH below the dollar CNY fix, but it's not holding below. So that means to me that investors are still only lukewarm on the idea of the fresh reopening in China. So that's going to be a very important measure point.
Yeah, and this is something to keep an eye on. Copper surprised me with its strength when it was on the verge of this breakdown. But, I'm not an Elliotician, but this still could be, corrective. So we'll see. I mean, there are a lot of copper bulls out there. I think more copper bulls than silver and gold bulls. I don't know. I haven't seen the DSI in a while. Stel, are you around?
Hello, I am here.
Hey buddy. It's the first time I've seen silver down with gold up in a long time.
Yeah, I think this is all just noise ahead of tonight. I'm not really putting any importance. Neither am I looking at the S&P being a little bit lower. My base scenario, I've said it before, is that the Fed will will likely be a little bit more dovish than expected, or let's put it this way, I don't think they're going to be hawkish. And the reason for that is that the main theme that we're seeing everywhere pretty much in the world is that of slowing inflation and price pressures abating. Look at Australian CPI dropping from 7% year on year to 6% year on year. Again, this doesn't mean that things are going back to normal. It just means that mathematically they have to drop unless obviously there's another shock like we had a year and a half ago. So I still think that central bankers will now have more excuses to become dovish, which is really what they want. They know that by tightening, they're killing the economy, and we're seeing all the leading indicators turning lower. I've said this over and over. I'm sorry I repeat myself, but that's my main view at the moment. I'm not saying that inflation cannot pick up again. I think it will eventually, but this move is, I think, going to continue going lower, and central banks will pause. I think the Fed will obviously do 25 today, but I think they're pausing after that. And frankly, if the market was not pricing 25, if it was a 50-50, I think they would stop. But they just can't do that now. So
first 4-hour divergence on S&Ps, the prior two highs were confirmed. Yesterday's late rally that made a new high wasn't. So
you're right, but I'm struggling to find anything bearish about stocks at the moment. And if this happens, which I think it will, and
you're expecting risk to rally on what Paul does and says today.
As a knee-jerk reaction, yes. And Mike is right. Agriculture, agris and oil are on the way back up again, which means that inflation will come eventually. Yes. But I think for the next, the remainder of the year or the next 6 to 9 months, I think it's not going to be an issue. So I think they all pause, and then we see what happens after that. So
okay. There's the agriculture our guy is talking about. And
yeah, or try DBA, which is a nice ETF, which has or DBA,
right underneath it, corn. And you know what? McDonald's looks like a top to me. And I know this is ForexAnalytix, but I was looking at this, and you have to think that their costs of I remember being on the CME floor. Cattle used to be 50, 60, 80 on a bull. Now it's like $2, and grains are taking off. That's what you feed the livestock with, and that maybe their margins are being compressed. Anyway, I think that you have a decent shot for a top in McDonald's. I don't know why it would top, but except for the cost of Soylent Green that they're selling. You ever have a Soylent Green burger?
What about fake meat, Dale?
Oh yeah, fake. I've never tried it. Have you, buddy? Have you been brave enough?
No. Yeah, I took 2 bites and put it in the bin.
All
right. Well, let's bring in the boss. Huh?
Wait a second. You guys don't like fake meat?
Do you, Blake?
Yeah.
I don't like fake anything.
No, well, I like fake boob. I mean, dang it. Slipped out. It totally slipped out. I mean, I like fake meat. Actually.
What is that? Beyond Meat, right? Beyond Meat, the company.
Yeah, Beyond Meat's good. One of my.
You guys remember Soylent Green? That movie?
No.
You guys are too young.
No.
Yeah.
All right. Well, Google it and watch.
I have one of my really good friends that we've known for years. They have a burger chain that was Whole Foods invested into them, and they have locations all around the United States, and they have fake meat burgers. So plant-based burgers. So they have they're great. I'd like them. I don't mind it. I feel like a little cleaner when I eat it. It's not necessarily, it doesn't replace burgers. I like burgers, but anyway.
Yeah.
You guys are snobs, bunch of meat snobs.
It replaces your shower. If you feel cleaner when having a fake burger, you don't need a shower then.
No, I definitely shower. That's for sure. No, I don't know. I don't mind them. But anyway,
all right.
So we got obviously the Fed today. We're seeing a little bit of a dollar, pullback here ahead of the Fed, which makes sense. I mean, the dollar's had a nice rally. This is going to be make or break it, I think, this week, because it's the dollar, I believe, is trying to forge a pretty important low. K-Man, you mentioned the big 618 in the euro. Yeah, that's something that we basically hit last week right here, and we hit the dollar index 618. We came really damn close last week as well. It's the big levels, and I think that this is going to be an important pivot for the dollar this week. Stelios, you believe you believe the Fed's going to be dovish? I don't think they will. I think they're going to be more hawkish, and I know, Ryan, you'd mentioned the same thing, or at least more so than the ECB. And that's kind of my argument right now is I really want to buy dollars on a dip. So I'm hoping that the initial reaction is going to be, a little weaker dollar following the Fed, but I actually want to be a buyer of the dollar on dip. So if we can get a dip down to the 100.80, that big pivot, the big breakdown point, I'd like to be long dollars there, especially against the euro. I'd like to be short the euro going in the ECB. So I'm actually looking for a little bit bigger move, in the euro, maybe up towards 111.50. for a short. But that's how I'm going to play the Fed. How are you guys going to play the Fed today? Let's go in a little bit more
Like
detail. What's that?
Like that.
Well, that's how I want to play it. Is that
Oh,
the
that's-
way you want to play
yeah.
it too, Dale?
Yeah.
Okay. Are you going to be focused more? Like, I'm going to be focused on the euro, although I do think that the Aussies, that weak inflation data overnight is definitely weighing on the Aussie today. But I do want to play into the euro. I want to stay with a little bit more liquidity here.
Yeah.
That's going to be how I'm going to try to play it. But what are you thinking, Ryan? How are you going to play it? I know your plan was a little different than mine. We both did a trade-off show. You did the trade-off in the UK. I did the trade-off in Australia last night. We're both looking at the euro a little bit different, but you are expecting a more of a dovish Fed. Is that correct?
No, I think they're going to be, well, the hawkish is a difficult term. I think they're going to reiterate their hawkish stance rather than be hawkish.
Yeah.
I think that's going to get a dollar rally. The big play I'm looking at this week is dollar yen. Just see if I can get a rally, in that over the Fed. Take profit on my long, reverse that into a short, run it into the Bank of Japan. That's what I'm mainly looking at. I think if you're trading euro dollar, anything like that, you've got to look at just sniping, just grabbing some pips, because you can't settle in a position on the Fed to run in, unless you've got a plan for the ECB. You've got a risk event tomorrow.
Yeah, there definitely is. Well, we got not only
landmines everywhere.
They are everywhere. I just covered up my my dollar yen short. I was short because of the 618 retracement here on after that Reuters piece last week. I was so pissed getting stopped out, and then I turned around and shorted it again at the 618, and I just covered it this morning as we hit the 38% retracement. This is another one, and I agree with you, Ryan. I'd actually would love to short that into the BOJ if given an opportunity. So if we can get another rally up to like 140, 150, something like that, I think that would be a great trade. I like that idea. K-Man, what are you thinking? How do you feel about the Fed today?
Great ideas every day.
Yeah, great ideas.
So boring.
What are you thinking, K-Man?
I think euro dollar. I agree. I'd love a move back up to perhaps 111, closer to 111.40 or so. But if you want to be short dollars, I think cable could be a good one, because cable sterling as a currency still looks to do a bit better than the euro.
See, it held the 618 this week.
I'm not going to take any. Yeah, but that's where I bought it earlier. That was my first trade of the week, actually. I saw there's a bit of a trend line coming in there as well. So I bought that one the other day and played it for a few pips. So, but I still think, on a really dovish FOMC or so, cable is probably going to be your faster one. Dollar yen will get a knock, but I don't want to have yen in position before the Bank of Japan. Hawkish Fed, Aussie probably not a bad one. What else? Dollar Canada seems to be finding a bit of legs as well. So perhaps oils are, let's say, cooling off a bit, and they are less buoyant than they were earlier this week or last week. So perhaps the Canada a long dollar for a retest of the 133 figure 40 probably, and a really hawkish Fed. I'd probably buy dollar China again, because I think, as I said earlier on the show, that the investors are telling us that they only half believers of the China stuff right now. Because if you can have your submarine sell dollar China to put it somewhere lower, but then in real effects, if you add more stimulus, it should rather water down your currency. So I mean, if it's really a hawkish Fed, I may just for a quick one, do dollar China again as well. That's basically it.
All right. Well, this dollar CNH, I think that it's the China lever that ultimately is going to end up getting pulled by China is weakening the CNH here. The Politburo meetings are talking about, the complications they're having with spurring domestic demand, which, hey, if you can't get domestic demand going in China, which you've been desperately trying, well, got to bring in monies elsewhere that would be in through the rest of the world. So
do you think they're talking about the number 2 guy in China just disappearing at all?
Was he on Obama's chef's boat fishing?
No, he wasn't, but he's gone and they wiped out, he Blanken and all those guys just met with the guy and she put him up there. So, there's some disarray, but boy, you really can get erased in a heartbeat up there from number 2 to gone.
Yeah, or you could be a U.S. president's personal chef. You can disappear that way too.
Yeah, I wonder how that happened.
That's weird. It's weird.
That's a weird one too.
Yeah.
He didn't like what Obama put a hit on him because he brought him a steak or something.
Who knows? Who knows?
Okay.
Steve, it looks like you're here. Steve, you have any ideas in the dollar following the Fed today? Are you going to be? Do you have any opinions on the dollar here?
Hey, mate.
Hey. Good morning, Steve.
Hi, mate. My idea, of course, I cannot assume that I can predict what the Fed is going to do, and I'm not in the business of guessing. But in general, unless we get something that's going to be pushing in the opposite direction completely, I'm looking for opportunities to sell the dollar. So, until I get some concrete data that tell me that I have to change my mind, I remain bearish the dollar, and I consider for the time being this rebound to be corrective. I'm looking to short. I'm already for a long time long silver, but I'm now also looking to short USD Norwegian kroner.
And the US dollar Norwegian krona has got a nice little bear flag pattern developing, but we're also nearing the top
the
of
Norwegian
the flag,
kroner has been undeniably one of the strongest currencies out there against the dollar for quite some time now.
All right, we'll keep an eye on that. And Stelios, what are you thinking? As far I know you mentioned you think the Fed's going to be all dovish and shit, but I don't agree with you. But what do you? How are you going to play it? Wait, let me guess. You're going to buy silver.
Well, you know what? It's the one thing that's going to move most, right? So, and people who are subscribers, they know that I took off a third of my long from 2309 at around these levels. So that was a nice little run. I'm still running the 2/3.
It's great triangle completion here, and nice move.
Yeah, and if they are hawkish, I'm just gonna unload the whole lot and look to buy at lower levels. I want to get short the dollar on rallies, or conversely long silver on dips. But if they are not hawkish, and if they're even slightly dovish, I think we're going to break above that 25.5, 25.3, whatever these highs are. And I'm just going to have to buy that third that I sold at higher levels, unfortunately, or actually no, fortunately. So I'm going to be playing it with the one thing that's probably going to move most than anything else, which is
all right. Okay, that makes sense. Looks like we don't have data. We got a guest coming in. Amelia will be here in a bit. But Dale, I want to mention this since you talked a little bit about equities, or you're talking about the divergence that we're seeing in equities. I want to bring up really quick something I talked about on the week ahead video, but also on the trade-off last night. You got Microsoft that's going to open up after failing at all-time highs. We failed at all-time highs. We're going to open up literally down almost 4%, 3.5% this morning, below last week's lows. You got a company like Microsoft breaking down. Take a look at Apple. Now, I know we have Apple earnings coming up next week, I believe on the 2nd or 3rd. I can't remember. But Apple's in an ascending wedge, in breakout territory, mind you, but still in an ascending wedge, which is a bearish reversal pattern setting up with very divergent relative strength. You can see it right there. You know, when you see some of these big names, you know, showing signs of being tired up at these levels, that's when you really have to worry. And I know we have other earnings today. I think we have Amazon tomorrow. We have Facebook or Meta. I still call it Facebook, but I guess it's called Meta. I still haven't pooped in the metaverse. When I poop in the metaverse, that I'll be convinced that that is actually a thing. But we have Meta coming up later today. You know, so big tech names that are starting to show some signs of weakness. It'll be interesting to watch this set of earnings later. I guess it's after the close today. So keep that in mind. As the team was telling us, there's landmines all over the place. You know, whether it's central banks, whether it's earnings, we got, you know, China, you know, all sorts of things. You know, my biggest position on the board right now is long dollar CAD, and you know, I've been long since last week. I am, you know, establishing a move because, yeah, it's trying to break out of this base, but I'm really looking for a move towards like 136 ultimately. From this, you know, long-term channel support. You can see that long-term channel support. So this is my biggest position on the board, and I kind of want to keep it throughout the FOMC because you know, well, first of all, it's positive already, but more importantly, it's because I'm with you, K-Man. I think crude oil, big rejection at 80. I think that you know, the Canadian economy is probably going to show some signs of weakness sooner rather than later. So I do want to play this one and continue to run this one to the upside. So that's kind of how I see things. The Fed is probably not going to be the most exciting central bank of the week. I think the Bank of Japan is going to be, and I know a lot of you guys in Europe are going to be staying up late for that one. Ryan, K-Man, are you guys going to be staying up late for that one?
Yep, we're having a party.
Yoo-hoo! We're going to have a pizza party over in the ForexAnalytix chat room. So make sure if you guys want to see
put some Beyond Meat pepperoni on there.
Ryan making fun of Blake the vegan. I'm not a vegan, by the way. I eat meat pretty much 6 nights out of the week. But if you want to see what's happening in the ForexAnalytix chat room, that's us here. You want to see what kind of trades that we're doing, you know, positions that we're closing out, positions that I have running open, you know, not just myself, but, you know, everybody else in the, you know, in the ForexAnalytix community. There's a lot of us that are posting in there. You know, the S&P room, you got the Flowonomics, which is the more macro chat room where all the big brains of the ForexAnalytix community hang out at. You know, really good stuff. And Dale, you know, the you know, DSI is posted in here every day here, and we got a lot of news articles that are constantly updated. So come join us in the ForexAnalytix community. With that being said, I'm going to pass it along to you, Dale, because I think you have an interview coming up, and I want to thank the whole team for being here today.
Nice job, team. For as you know, for as difficult as it is to prep for a red event, great job. A lot of ideas floating out there.
And good luck to everybody for the FOMC day.
You know, I can guarantee this: the markets will be here after the Fed. Make sure your equity is. Okay, so if you didn't want to trade around this stuff, it's not your style, you know, you don't have to. Sometimes we forget, we think we have to. You don't. Amelia, I know you like to trade. How are you?
Yeah, good. Can you hear me?
Can hear you.
All right, great.
So welcome back to F.A.C.E. How's
Thanks.
the diamond business?
It's good. It's a little tough. Diamond prices are falling, but you know, that's to be expected with you know, slowing consumer spending. We're a little bit like Peloton bike, you know, like during the pandemic, people had this surge in luxury goods spending across the board, and that included diamonds and diamond jewelry, kind of like, you know, Peloton bikes, right? And now prices are coming down, and they're just reverting back to like pre-pandemic levels, basically. As you know, we don't have
and who was your market? Was it the 1%ers, 2%ers, or more the you know, middle class guy that wanted to have a piece of something? Who's your market for that product?
For a commodity, I mean, our commodity right now, the coin is priced at 48 $4,830, and then the bar is always 10 times that, so about $48,300. So they're just, we have retail investors, we have institutional investors, we have mainly high net worth people. We also have a fund that if you don't want to hold the physical commodity, you can invest in the Diamond Standard Fund, because some RIAs can't. You in your RIA, oftentimes you can't hold a commodity, but you can hold a fund. So,
do you want to show our attendees what they look like?
yeah, I'm just trying to find my share screen. Sorry, where
it's
is
at the
it?
bottom, Amelia.
At the bottom.
You just
Okay.
scroll your mouse.
All right, great. I got it right here.
Oh, they're there. Okay.
Can you see? Yeah, so that's the coin and that's the bar. And just so you recall, both are on the blockchain. So that means that if you hold the physical in our vault in Brinks in Delaware, which is important because you would pay no sales tax if it's in Delaware, and you want to trade it on our spot market, which we have, all you would do would be trading the token. You wouldn't have to move the physical commodity. But in any event,
Okay.
we're in the process of, just to remind you, we're in the process of financializing the diamond commodity, which means that right now we're underway developing futures, options, and an ETF. So my opinion is you kind of want to hold these commodities as a strategic investment through the launch, in 2 to 3 years of the ETF, because we tend to think of this kind of as the GLD, which was launched, GLD was launched back in 2004, and you saw a subsequent position build in gold to back that ETF in a price rise. So we're kind of, no return can be guaranteed, of course, but that's kind of the model that we think of this as.
Amelia, currencies have been your wheelhouse for a long time. That's how you broke into the business. I'm curious on what your thoughts are about, I think, the biggest financial or monetary story since Bretton Woods, the CBDC. What's your view on it? Do you believe it's going to be implemented? And what do you think it's going to take to get the public to accept it?
Are you saying central bank digital currency?
Yeah.
Yeah, I mean, the Bank of England is launching one, ECB. It's underway in the dollar, though I feel like obviously the Fed, we just don't hear too much about it. But I think it's one of those things where it's hard to know how the public will react. But I tend to look back at strangely, the pandemic, remember at the start of the pandemic, when people, I don't know, there was this thing where like restaurants and stuff.
Toilet paper?
Yeah, they didn't. Well, no, paper money. They didn't want to accept cash because they didn't want to.
Oh, yeah, that's true.
And prior to the pandemic, it was so not funny, but ironically, before the pandemic, before anybody even knew this was happening, in New York City, when I was living there, I started seeing signs pop up in just bodegas and stores and everything saying, we don't accept cash anymore. We don't accept cash anymore. And so I was like, and this was like 2018. And I was thinking like, oh, what do people think about this? So I tweeted out and people were very divided, like cash is American and they should accept it. And then, no, it's so inconvenient. It's faster not to accept cash. And it was a lot of like disparate opinions. And then I was surprised, even right here, I live at, a small beach town in Florida now. And when the pandemic hit, all of the restaurants and shops converted and almost like within a week to these electronic payment systems and didn't accept cash anymore, and digital menus and everything like that. And they did it so quickly. And I was actually, as an economist, like pretty surprised at the speed at which they did it. And so my point is, when we convert to digital, currencies from the central banks, I think you may hear a lot of resistance and a lot of suspicion. And then I think it'll just be a quick switch, kind of. That's what I kind of think.
Okay. All right. How do they sell it? Do you think that what's happened recently in regional banks and some flight capital, and perhaps we need even more incidents of bank failures, so that the public, because this is really a takeover by the Fed. I mean, our currency always came from the Treasury, right?
Right. I mean, I think
it's not going to be, it's not from the
Treasury.
Treasury.
No, I think that is just, there's going to have to be like a public education campaign, because, you do see a lot, you do hear a lot on Twitter and everything out there that the government is watching your money and this and that. So there's going to have to be some sort of, public education campaign, not probably unlike when
You mean
in
indoctrination campaign?
Yeah, maybe.
Okay.
But
All
I mean,
right, so
if you want to keep your money outside the banking system, in my opinion, holding a huge like Bitcoin position isn't, or even stablecoin position is pretty difficult. I mean, if that's your main source of banking, I wouldn't suggest that. But if it's that, a trade, I would suggest it. But if it's how you're going to hold your money outside the banking system, I'm going to suggest
how do people? There's a lot of people trying it that way.
a lot of
by
people are
being
trying
on
it that
blockchain.
way. I guess what makes me nervous, especially about stable coins, is that though they say they're backed 1-for-1 with the US dollar pegged ones.
Who knows?
Yeah, who knows? And when you go and you dig deep into the reserve holdings that they publish with the lag, they don't match 1-for-1 because they're published with a lag, and then you wonder why. It's published with such a lag. And then the other thing I wonder too is why they don't report the custodian. So, if it's pegged 1-to-1, where in the world are these funds? Who's holding them? You don't know that.
Are you an adopter of Bitcoin? Do you own any?
No, I'm not an adopter of Bitcoin. I think it's a good trade in and out, but I'm not an adopter, no.
Okay. You still like the precious metals? Since we last talked, we had a little correction. And we came back.
Yeah, I do.
Still
Let
like
me go through a few charts. Can I do that?
Okay. Yeah, of course.
I know you
Love to
guys
see
talked
your
about
pictures.
this.
Okay.
You can see, right?
Okay. So there's the Dixie. Do you think
Yeah.
a lot of people got caught on a false breakdown and the market's so short the dollar and it could run now?
Yeah, I do. I mean, the market is really long euro. CFTC contracts
Yeah.
are very long, they're very short dollar. So the risk is that it comes back. And I just wanted to point out this range. I'm kind of like not really talking so shorter term. I'm just kind of backing out, looking at some of the large trends so we can see what we want to do going forward. But I mean, since the end of last year, we've been in this 105, 100 range. And so you have to think like, what is it going to take to break downside or up? We're just kind of staying there for the last 6-7 months almost. So it's
what do you think would break the upside?
I think the market has to, the Fed would have
risk off.
Yeah, the Fed would have to pivot viciously. I mean, like today they'd have to come out and have this is the last rate hike, and we have
we're cutting rates by 2% today.
Yeah, which isn't, I don't think that's realistic. Or the market has to accept, which they have not yet in the Fed funds futures pricing, that rates are going to be higher for longer. They really haven't accepted. And that'll probably.
So maybe that's what takes out 105. And
I think that's what takes out 105.
Some of the tech stocks look pretty heavy. Microsoft's going to get hammered today. It's the first time I've seen S&Ps rally to a new recovery high, Amelia, without the Qs or the NASDAQ. All the way up, they led. And now they're not confirming what the S&P just did. Yesterday.
Yeah, NVIDIA was such a shiny ball when those results came out.
Okay, so Euro. You used to talk targets. I know you still know how to do that.
We're just hanging out. Like, obviously, no big deal, but support is, 110 on Euro. So, we'd have to really break topside 112 to plummet the dollar through that 100 base lower. Or, if Euro is sitting around the 110, if it breaks downside, then you'll really see the dollar move up again to that range, like say 102, but it would still be kind of stuck there in that mid range. You probably need Euro to move back down, 105 level to really see the dollar move higher. We're just kind of rangy. And I think that's just because both central banks are fairly hawkish right now. But
could it even be? Oh, go ahead. I'm sorry.
That's okay. We just do have, the technicals. We do have the short dollar position and the long Euro position, and that'll probably reverse to some extent, I think.
Okay. And everyone's pretty central bank focused. There are 3 this week.
I know.
But do you think that they're, maybe not focused on the escalation that's occurring in Ukraine? Would be a risk for Euro?
Yeah, I mean, Europe has a war in its backyard, and it has for a while. And I do think that's a major geopolitical risk that people aren't factoring in. And I do think that's why you should be holding some gold. And I do think that's why the dollar could be supported ahead. I mean, for the last 2-3 years, you've had these exogenous shocks that kind of rotate to the front, a macro risk that isn't market related. And, you got to have some sort of hedge or, diversification on, I feel like.
Because I mean, with cluster bombs and now drones being sent to Moscow, and it just feels like it's escalating. To me, it feels that way.
It does. And I mean, there's some activity too in the Gulf with
oh yes. Yeah.
I
read about, so that's interesting you brought it up. A lot of people are saying we have a naval buildup in the Gulf, that there's going to be some action against Iran, because they've been, provocative with tankers in the area. Well, boy, would that be a great time for China to make a move when we have all our naval forces committed to the Gulf.
Yeah, I mean,
have you thought about that? I mean, I know that Iran's been on the table for the U.S. and Israel for a long time, and eventually something will happen. But Biden talking about we're low on ammo and our navy's in the Persian Gulf, that's kind of far away from Taiwan.
Yeah, I mean, they've been it's tough. They've been over there. My husband's active duty Navy, I'll just admit that.
Oh, okay.
So that's why we're based here in Florida at a Navy base.
Yeah.
But about a year ago, he's been on and off deployed for nearly 2 years now. He's home now. But a year ago, you can look this up, public information. You can Google it on CNN. USS Sullivan's DGG-68, which he was Command Master Chief of, they were in the Gulf and they, stopped an Iranian ship from taking over an oil tanker. They have video, and you can Google it. But I mean, this isn't too unusual, but I just wanted to highlight the risk of, we have activity in the Gulf, we have activity in the Taiwan Strait, we have activity, off Japan. With
have you ever in your career seen so many pots boiling on the stove?
No. And so I do think that the market is underestimating geopolitical risk, which is why I would hold precious metals to some extent, and I would hold the dollar just in case. Just in case.
Okay. It's great to have this kind of talk with you, Amelia. Anything else you want to cover?
Yeah, just a few things. Okay, so I just wanted to point out, this is a dollar in the 10-year, and that red vertical line is that was the CPI release July 12th when it came in lower than it. And I just wanted to point out, rates moved lower, but the dollar moved much lower. It really separated. They were the same direction, but it really separated from the level of rates where it had been kind of trending together. And so it's ironic that rates are staying higher, but the dollar was so weak. So I think the dollar weakness is kind of overdone on that release. And the front end of the yield curve has been pretty anchored after that release, where the back end has moved lower. And the reason why the back end is moving lower is because no one can work out what's going on ahead with the Fed, when they're going to pivot and start to. And this is just the Fed funds forecast. This is the Fed funds rate forecast, the black line by the Fed, and then what the futures contracts are pricing in as of last Friday. And they're about 50 basis points lower at the end of next year, 55 basis points in the Fed. And I think the risk is that they correct up. And you can see that their rate cuts start much sooner than what the Fed is anticipating. So the risk is that this once again corrects up back to the Fed's forecast, and that would, support the dollar. And it makes the bond volatility, the MOVE index, quite high, right? Bond volatility has been. And
there's a place where positioning hasn't paid, fading it hasn't paid off, and going with it hasn't paid off. I think you have record net short treasury positions historically now. Yeah. And so people have been trying to fade it because, it's overdone. And, but I look at the chart and it doesn't look terrible, doesn't look great. I don't know what to do with yields right now.
Yeah, I think most of the market feels that way. They've been so volatile. And the reason, of course, is because the Fed is so data dependent that any tier one data released, everything just reacts to. There's no forest anymore. There's only trees. That's what's
Yeah,
happening.
I mean, I don't think we're going to 3% 10-year like a lot of people. Maybe 3.5, but I'm with what you just talked about. I think the 10-year could be making new highs in yields going into the end of the year.
Yeah.
Are
Yeah.
you
So
there?
I am here.
Like
Can you?
No, I mean, are you in that camp over
Yeah.
430 by the end of the year?
Yeah.
Okay.
Yeah.
Interesting. All right.
I just want to take a look at gold ETF flows because I've been talking to a lot of gold experts recently from Gold Council. So they watch these flows very quickly. I mean, very closely. And, you know, in their opinion, and I think, you know, it's nothing new, retail trade in gold can't carry it, right? So you get a base in central bank buying, which has held it up. We had record central bank buying in gold last year. Then, you know, but unfortunately, the first 3 months of the year saw inflows from institutional funds into gold ETF. In June, saw a massive outflow, and you see that there on the chart.
Yeah.
Institutions are not right now investing in gold, and that makes sense because, you know, Nasdaq's up like 37% this year. So, even though we talked about the risks out there, you know, certain markets like equities are trading in a very risk-on manner, not a risk manner. And so these portfolio managers, you know, if they're not up, say 37% this year, they're going to have to start swinging for the fences because that's what they're going to be judged against, right? So right now you just see institutional outflow from gold. And, you know, when I talk to people from World Gold Council and I talk to Metals Focus, you know, the analysts there, they're all saying that they really need this inflow to push gold, you know, once again above 2000 sustainably into a new high. So if I were investing in gold, you know, I would have it as a hedge because of all the geopolitical risk, but I'd also be watching, these are published publicly on the World Gold Council once a month. I'd be watching these institutional flows into gold, and when they start to build, you know, that would be a good time to build a gold position. Because that's what really
much better to have a tailwind than a headwind.
Yeah, that's what really pushes it. And because, as I said, the equity strength this year and all the big tech stocks, you know, institutions have turned away from gold, which is a little strange given all the geopolitical risk.
The times they are a-changing.
I know. So we have an interesting day today. Very interesting with the.
So here's your overview. So Amelia Bordeaux's narrative right there.
Yeah. I mean, I just want to point out, I mean, I'm sure everybody knows, but I think it's ironic that the market continually talks about whether you're an equity trader or a precious metals trader or a foreign exchange trader or a fixed income trader, it doesn't matter. They constantly talk about the peak in the Fed funds rate is near, and they've always been wrong. It's always been moved back and back and back. And then, you know, they've always tried to estimate the duration of the Fed funds rate, meaning from the peak to the first cut. And that is always continually being revised over the last 2 years. So the risk is, you know, given the history of the last 2 years, that the peak is going to be higher and the duration is going to be longer. And so, you know, markets kind of always trade this hope that that won't be the case. And then they end up revising it back to that baseline. And so I just think that's the main thing you have to, you know, you have to watch.
You like maybe buying the VIX here at 13, 14?
You know, I do like buying. I always buy.
I am. You too? Oh God, we're both crazy. I'm in a lot of D's calls.
Yeah, it hasn't moved given all the risk.
No, but with the market's making new recovery highs, why isn't it at 12? Is what I'm asking myself. So anyway, Amelia, a pleasure.
Thanks so much.
I mean, crystallized a lot of things for me. So if it did it for me, I know it did it for everyone who was listening or will watch a video later. Best way for people to keep in touch with you?
Just hit me up on Twitter, Amelia Bourdeau. And if you have any questions about this or slides, you want to see charts, just hit me up there. If you're interested in our diamond commodity and just our company in general, it's diamondstandard.co. You can find us there as well.
Or you could get a hold of her to, you know.
You can get a hold of me I'm on LinkedIn too. Bordeaux, whatever.
LinkedIn too. All right. So Amelia, really great talking to you, and I hope you have a great summer. And let's get back together in the fall and
Yeah.
and see what's going on then.
All right.
Before we
Exciting
head
day
in.
today. Good luck,
Yeah.
everybody. Today.
Yeah, good hunting, Amelia. Thanks so much, my trading warrior sister. Appreciate it.
Thank you. Bye.
All right. Amelia Bordeaux, everybody. And she is sharp. Follow Amelia at Amelia Bordeaux. And that's going to be a wrap for me, everybody. Remember, you don't have to trade. Let the dust settle, and where you can manage risk, and let the market come to you. And I'll see everyone. There you go. That's Amelia's handle. Thank you, Amelia. You could join the team in 20 minutes on the Morning Edge. Adios, everyone. Have a good day. From Coach.